In this video, I will show you how to easily spot trend reversals before they even happen. Now, before we continue, first, let me ask you a quick question. When you're trading, have you ever encountered a situation where you took a buy position when the price was on an uptrend, only for that trend to reverse downwards, which leaves you holding at the top? If so, I know it's frustrating because I've been there before. And so, after countless hours of research and backtesting, I actually found a strategy that you can use to predict these reversals before they even happen. So strap in, because we're going to go very in-depth in this video. So first, let's start with the basics. What is a reversal? So a reversal simply means a change of trend direction. Like in this example, we have an uptrend that switches to a downtrend, then you got yourself a reversal. Simple. Now, a common mistake that traders make is they think that because the price has gone too high, then it's automatically going to reverse. This is actually the wrong mindset to have, because think about it. If prices are going higher and higher, it means that the upwards momentum is strong. So if you tried shorting this market just because you thought it was too high, then you're actually trading against a trend, which is not a good idea. Remember, prices can always continue higher. So with that being said, here are a couple of strategies that you can use to predict reversals before they happen. The first one is called break of structure, and this is how it works. So first, in order to spot a reversal, the first step is you want to find an existing trend. And in this chart, we actually spotted a clear uptrend here. Notice how the price is structured. It formed higher highs while respecting this bottom level, meaning we can also draw an upward trend line below it. Now here's what you need to remember. As long as the price remains above the trend line, it means that the uptrend is still valid. So in order for us to find a reversal, the price has to break the trend line first. And so we want to wait until the price breaks the trend line, as you can see here. But be cautious. Just because the price broke out of the trend line doesn't mean that a reversal will happen, because even though the short-term trend is down, the long-term trend is still up, meaning that the price still has a chance to go back upwards. So to confirm that the price will not go back upwards, we need to wait for signs of momentum loss. So let's let the price run until we find a confirmation. Now notice, the price tried pushing back up and failed. Then, it tried again and failed the second time, which created a double top pattern here, indicating that buyers aren't strong enough to push the price back up. So now, we already have multiple reversal signals. First, we saw a break of a trend line, which means the price broke the uptrend structure, and a double top pattern, indicating a loss of upwards momentum because buyers failed to push the price back up. So all these factors combined has led us to believe that the trend is going to reverse. And so this is a good opportunity to take a short position. And of course, no strategy is 100% accurate, so we need to make sure that our exit strategy is in place. So for our stop loss, we can place it near a key level, which is slightly above the double top pattern, and set your profit target at 2-to-1 risk ratio. And as you can see, this trade ended up being profitable. Now let's look at other variations of this technique. So in this chart, we spotted a clear uptrend as price is forming higher highs, and below it, we have multiple rejections, meaning we can place an upwards trend line. Next, we can see the price failed to make higher highs and formed a lower highs instead, while also breaking the upwards trend line. So this indicates that the upwards buying pressure is weakening and that sellers are starting to push back. But again, don't take any positions yet, because remember, the overall trend is still an uptrend, so we still need further confirmation. Next, we can see that the price tried pushing back up and failed. Now notice what the price is currently forming. It formed lower highs and lower lows, which means we now have a current downtrend. So let's recap what we have currently. First, we have momentum loss indicated by the price failing to form higher highs. Then, we have a trendline breakout indicating that the uptrend structure was broken. And finally, we have a current downtrend, because price is forming lower highs and lower lows. So all these factors combined has confirmed us that the trend has shifted to the downside. And so this is a good opportunity to enter a short position. And for your exit strategy, you can place your stop loss at the nearest key level and set your profit target at 2-to-1 risk ratio. And as you can see, this ends up being another profitable trade. Now, what I just showed you is how we spot reversals if the price were to break out of a key level. But remember, prices don't move like this every time. There are also scenarios where the price bounces off the key level instead, which brings us to the second technique to spot reversals, which is using key levels. And this is how it works. The first step is we want to find a key level for the price to bounce off. And in this case, we actually spotted a resistance level up here because price went up, hit and reversed from it. Now the next step is we want to wait for the price to approach that key level once again. And as you can see, we saw an uptrend approaching the resistance level. But remember, you cannot just assume that a reversal will happen just because the price hits a key level, because price can always break right through. So we need to have extra confirmation to make sure that the price will actually reject this key level. And we can do that by looking for overbought and oversold levels with the help of the stochastic indicator. So first, go to the indicator section, type in stochastics, and apply it onto your chart. For the settings, I like to leave it as it is and just use the default settings. So for this setup, what we want to look for is price touching the key level while the stochastic is displaying overbought or oversold, like in this example right here. But again, prices can still break right through even though the stochastic is at overbought. So to confirm that there's actual downwards momentum at this area, you want to wait for the stochastic to cross below the overbought lines again. And once this happens, you can take a short position. And just in case the trade fails, we need to have our exit strategy ready. So for our stop loss, we can place it slightly above the key level and set your profit target at 2 times the risk. And as you can see, this trade ended up being profitable. Now, moving on to the third strategy for spotting reversals, which is by using trend indicators like the exponential moving average. And this is how it works. So first, go to the indicator section, type in exponential moving average, and apply 2 of it onto your charts. And for the settings, set the first one by 10 and the second one by 20. So now you have 2 EMA applied. And the way we read this indicator is very simple. If the line crosses above, it indicates that the market is uptrending. And if the line crosses below, it indicates that the market is downtrending. However, for this version of the strategy, we don't immediately take positions just because the EMA crosses over. Because if the market is on a range like this, it will actually give you many false signals. So instead, you want to use this indicator as a secondary tool to confirm a reversal. And this is how you do it. So again, the first step is you want to find a key level for the price to bounce off. And we actually spotted a resistance level up here. As price goes up, hit and reverse downwards. Next, you want to wait for the price to approach the same key levels again. And once the price approached it, you use the EMA to confirm the trend change at this area by waiting for the lines to cross over downwards. And once this happens, you can take a short position. Now, for your exit strategy, you can place your stop loss right where the EMA crosses over and set your profit target at 2-to-1 risk ratio. And as you can see, this ends up being another profitable trade. So those are all the different strategies that you can use to spot reversals using the day trader technique. Now,